This segment sponsored by Foster Financial. Welcome to Money Monday, where we give you holistic financial advice to help you out through retirement. And joining me today is Caleb Doane, the Vice President of Foster Financial. Good morning, Caleb.
Good morning.
How are you?
I'm doing well. How are you doing?
Doing well also. Okay, so we are going to talk about interest rates and how to lock them in. So I'm sure there's a whole method behind it. So first, tell me, why is it important to find the best interest rate?
Yeah, so I mean, a lot of the kind of news that you'll hear about the economy recently is all surrounding interest rates.
Yeah.
Because they just have a lot of impact across, businesses, people taking loans, people getting interest on their CDs and stuff like that. So it's a pretty broad impact. And whether you sort of benefit from interest rates being high or low really depends on whether you're the one receiving the interest or whether you're the one paying the interest, right? So, I mean, there's a lot of younger folks who, if they're looking for a home, obviously they want interest rates to be low because they're going to be paying the mortgage for the next 15 or 30 years. Yeah. A lot of the clients that we work with, they're in retirement, they probably have their home paid off, and they're the ones who are investing in money markets or CDs or bonds. And so they're really benefiting from interest rates being higher right now.
Yeah.
And so there might need to be some action taken if interest rates are going to come down.
Okay, so just as you look at this year and really understanding the patterns, how do you think interest rates will perform over the next year?
Yeah, so at the beginning of the year, they were talking about a bunch of interest rate cuts over 2024.
Yeah.
We never really anticipated that was going to happen. We kind of, thought that inflation was going to be a little more difficult to bring down, which it has been. So now they're talking about maybe one or two rate cuts throughout the rest of the year here. And I certainly think it's likely that over the next 12 months, if interest rates move, they're probably going to move in the downward direction.
Okay.
And so for people out there, if they have a lot of money in like a money market account at their bank, they're used to getting, over the past 6 months or a year, they've been getting 5%, 4.5% interest on that. And that's been a great place for people to park their money.
Right.
But now that's changing. That's as soon as interest rates go down, banks are going to be the first ones to stop paying out that interest because obviously if they can't earn that interest, they're not going to be paying it out.
And so when you say when the interest rates go down, so is this only in mortgages or what other ways do interest rates impact our viewers?
Yeah, great question. So when the Fed lowers interest rates, they're lowering the Fed rate, which has impacts across everything else. So it impacts Treasury bonds, what the government is selling. It impacts mortgage rates. It impacts CDs. Basically, every interest rate in the economy is changed if the Fed were to lower their interest rates. So if mortgage rates go down, so are CD rates, so are Treasury rates. Everything is going to move.
And that applies to auto loans and just loans across the board, right? Okay,
Yeah.
so people, it will impact them if this happens in a good way. If you are needing to purchase a car or a home, but you're saying that it will impact you in a negative way if you are making dividends.
Yeah. If you're getting the interest payments off, a CD that you have at the bank, when you go to renew that, they're probably not going to offer as high of an interest rate. And so one of the things we can look at is, all right, how can we lock in that interest rate while they're high so that you get that high interest rate for the next few years?
Okay.
And there's a lot of different options, and it kind of depends on the individual situation with what we do. But just today, I looked at interest rates for MYGAs, which is a multi-year guaranteed annuity.
Okay.
It acts similar to a CD, but it's from an insurance company and kind of has some differences there. But it was over 5.8% for 5 years.
Okay.
So you'd get to lock that in. So if people right now, if somebody's out there, and we'll have a lot of clients like this, that they have $100,000 that they just leave in cash in a money market account, and that's kind of their emergency fund or just excess fund that they have. Putting a portion of that into a MYGA that locks in that interest rate for a longer period of time can be a really good option.
And so even something like that, is that a large investment that someone has to do? Do you have to lock down a certain amount? So are people really gravitating towards those types of options?
Yeah, it depends on the insurance company. You know, some of them have minimums that you have to invest. A lot of times they might reward you for investing a little bit more. They give you a slightly higher interest rate. But But a lot of times these MYGAs can be purchased with $1,000.
Okay.
Same with CDs, can be $1,000 or more. We can put funds into it. So if people out there have CDs that are coming due within the next 6 months, the banks want to hang on to that
Right.
money, and so a lot of times they'll offer you some sort of an interest rate. They'll say, "Hey, I'll give you 4% for the next 6 months," or whatever it is. But the thing you have to think about is what's going to be the interest rate when it comes due in 6 months.
Yes.
That's kind
Okay.
of the reinvestment risk that we talk about. So locking it in now for a longer period of time can end up benefiting, especially retirees.
Okay. Well, I know that there are so many different options that people can lock in.
Yeah.
But you have the information and the knowledge, so that's why people need to come and see you and have this conversation. I know you will be tracking the interest rates closely, and you'll be telling us when they change. So
Yeah.
thank you for your information.
Yeah, absolutely.
And if you would like more information about Foster Financial, we'll have their website and phone number listed below. Contact them for a complimentary consultation. And I'll see you after the break. This segment sponsored by Foster Financial.